David. Good morning, ladies and gentlemen. It's a pleasure to welcome you this morning, and it's done the format slightly differently. We've given you a whole week to look at the presentation, very brief, so that we can then dedicate a lot more time for the very many questions. Before I get into the presentation, I would like to request my colleagues from Centum to just stand up wherever they are so that you get around introducing everybody by name. But those are my colleagues at Centum, and those are the... And of course, just to welcome everybody, you're all distinguished guests, and you're all... speaking after David is always a... Is it a tall or short act to follow? So it's from 2009 to 2012, what we've achieved and what our plans are. We'll then have 30 minutes for questions and answers, so with a view to being ready to depart at 9 a.m. Providing a channel through which investors can access and build extraordinary enterprises in Africa. And that's what we've sought to do, and that's what we've been doing over the last 45 years of Centum's history, and specifically over the last 3.5 years since the commencement of the current strategy period. And you'll see some of the real tangible investments that we've been working on. Our investment portfolio, as at September 2012, was at 19 billion, and that is split between private equity at about 9 billion, real estate and infrastructure had 4 billion, quoted private equity at about 2 billion, and we had cash and other assets of about 4 billion. You will recall that towards the end of September, actually the last week of September, we successfully raised 3.2 billion by way of a private placement of a bond. And at the end of the year, those funds were largely in cash. And as we've progressed through this, the last few months, they have subsequently been invested across the various, across the different business lines. In terms of our strategy, this is really our scorecard, and this is our pillar, and we've tried to be very consistent in sticking to the strategy, remaining true to our communication, and remaining true to the goals that we set ourselves in 2009, which at the time were fairly ambitious. And we had five pillars to our strategy. The first pillar was around performance, which was consistent delivery of market-beating returns. And over the last 3.5 years, our net asset value per share has grown cumulatively by 137%. But that's one side of the story. The more interesting side of the story is a platform that we are creating to sustain even greater growth in the months and the years to come. The second critical pillar was around diversification. In 2009, Centum was largely a Kenyan company and primarily invested in listed equities. And our focus is to give investors access to inaccessible investment opportunities. And so we've gone to great lengths to diversify our portfolio into private equity, into real estate and infrastructure, and also in terms of geographical diversification, including within our quoted private equity business, where we are now, I think, as you will see from the numbers, half the portfolio within our quoted private equity business is now outside Kenya. The third aspect was growth. In 2009, we had 6 billion in total assets, and we set ourselves a target to be at 30 billion by March of 2014. As at September of 2012, so in 3.5 years, we were at 19 billion. I am confident that in the next 1.5 months, we will get to our target of 30 billion by 2014, by March of 2014. Brand. For us, brand is not so much communication, not just communication, it's not just advertisement. It's about the consistent delivery of the promise that we make. And that can only be done through people and the processes. And you've seen the Centum team, and we've been working very hard to ensure that we build a team with the capabilities to consistently deliver on the promises that we make. And finally, it's around costs. It is our desire to ensure that costs do not outrun our business, and we set ourselves a goal of keeping our business within a cost structure, running the business at a cost structure of 2.5% of total assets. So far, we managed to do it at 2%, and as at the first half, we were at approximately 1% in terms of cost to total assets. So getting into the details, what are we trying to achieve as a business? Our objective is to consistently grow shareholder value and grow shareholder value at a rate that exceeds what an investor would generate if they were invested in the NSE index, because that's the opportunity cost of being an investor in Centum. In March 2009, the book value of shareholder funds was at 5.9 billion. By September of this year, that figure was at 14 billion. So it's gone up approximately 137%, or 8 billion in terms of growth so far. NAV per share, in 2009 it was 8.9 shillings, about 9 shillings. By September of this year, it was at 21 shillings. And this is something that intrigues me. Our share price is now approximately 12 shillings. So we are trading at about almost a 50% discount to net asset value per share. So if you are to liquidate the business today, and because the net asset value per share is a conservative estimate of the value of the assets in the business, and it's currently at 21 shillings. My own view is that this particular discount is a temporary discount, and it came down in 2012 because the share price previously was above 20 shillings, and so we've been trading historically at a slight premium to net asset value per share. And those are the opportunities for investors, and those opportunities are not necessarily open and for a long time. That window may not necessarily be open, for a very long time. And I believe as we get some of our critical projects off the ground, our expectation is that we will see the gap between price per share and NAV per share converging. In terms of our NAV return, because that's critical, we track our performance from an NAV perspective and compare it to NSE. Overall, in terms of the geometric average, it's been about 24%. NSE over the last 3.5 years has delivered 12%. So we've roughly outperformed it, or we've outperformed it by about 12 percentage points. In the first 6 months of the year, we delivered a 3% return. We have 3 business lines. Our quoted private equity business line outperformed the index by about 4%. It was around 22%. Our real estate business line, we did not carry out revaluations as at half year, and I'll explain to you what is happening. So we'll see the full numbers flowing in towards the end of the year, and the same applies to our private equity business line. So the 3% you see will normalize when we get to the end of the year, and we then do the full revaluations at the end of the year. Geographical diversification. We are now present in, of course, we've been in Kenya, we are now in Uganda, we have investments in Rwanda, we're in Tanzania, and we also have made significant investments in Ghana, which is a market that has done fairly well and which has very strong macroeconomic fundamentals. Our focus is to be Africa's foremost investment channel, not Kenya's foremost investment channel. And so for us, it's critical that we get a presence across sub-Saharan Africa, and then give you investors and your clients, by investing in Centum, an opportunity to get exposure in those markets that you not otherwise have exposure into. Our investments outside Kenya are at 16%, and that is growing. And our target was to be at 50% by March of 2014. We have a pipeline of opportunities which we will share with you, which we're working on executing on. And my expectation is that by the end of the year, the end of this financial year, March 2013, we should be at least 25% of assets outside Kenya. That's our diversification by asset class. I think that's a critical slide. And what I would just like to highlight in this slide is that if you look at 2009, we had about 38% of our assets invested in listed securities. And these were listed securities on the Nairobi Securities Exchange. That proportion has since come down to around 11%. And of that 11%, half of that is invested outside Kenya. So the way the market understood Centum historically was Centum was a proxy for what was happening on the NSE and the Nairobi Securities Exchange. But the way Centum is today, the correlation has reduced significantly. And that is the advantage of Centum in your portfolio from a diversification point of view. And it's consistent with our vision, which is to provide investors with access to inaccessible investment opportunities. Real estate currently accounts for about 28% of assets. I was talking to an investor today who was saying he's not quite sure about the valuation of our real estate assets, which is understandable. I'll be explaining in a bit of detail what is happening on that front and what we are doing to get real market discovery around the valuation of our real estate assets. But even if you are to discount them fully, it just reduces the discount to about 25%. So even if you are to eliminate that line and attach a zero value to it, the price would still be lower than NAV per share by about 25%. Total assets have grown from 6 billion to 19 billion, so it's been a threefold increase in 3.5 years. My own perspective, and I think the view of management, and as you get to understand our portfolio, is that many of the assets are still significantly undervalued, even the assets within the portfolio. The values that we are reflecting those assets at is not quite reflective of full value, and that's a real potential in this business, and that's what really excites us about the business. And what you're trying to do is to realize that value. From a funding point of view, we have moved from a 6 billion company to a 19 billion company in 3.5 years without any external capital raising, with the exception of the 3.5 billion that we raised in September of this year. The investments we've done over the last 3.5 years have largely been funded through internally generated funds, which I think is a testament of the cash generation potential of the portfolio that we have. And that is the reason why the board and the management took a decision to adopt a zero dividend payout policy until March 2014, which was a current strategy period, so as we could use those funds that we were generating to then reinvest and grow the business. And that's the explanation behind the 137% growth in shareholder funds. We've now taken on some debt. Currently, debt to asset ratio stands at about 25%, which is fairly conservative. But also when you look at it in terms of debt service as a proportion of cash flows, you'll see the numbers. It's still quite conservative. We still believe there's room to take on a bit more debt, and we have capacity to take on another 1.5 billion shillings of borrowings, and we'll be explaining to you what we are doing about it. We have various projects that we are working on, both in real estate and private equity. And on those projects, we are now engaging with third-party partners to then invest directly in those projects. And these were the opportunities for you and for your clients to come and partner with Centum in investing in fairly high-quality investment opportunities that have been developed to a fairly high degree of, that are a fairly advanced stage. And of course, we're also working on managing third-party funds across our private equity and real estate business line. Getting on to the bond, which we concluded in September. The way this bond was structured, we came into the market with a private placement of a bond. And the bond was a 4 billion bond with a greenshoe of 1 billion.